Hello everyone, and welcome to day 3 of Newfound's market mission in the UK. Obviously it's great to have everyone join after 2 very good sessions yesterday. I suppose the whole ecosystem and the regulatory environment and the sort of people you need to get to know, I think went through some great discussions yesterday. Philippa Martinelli at DIT, I mean, she was giving some sage advice about companies, fintechs doing your research up front, particularly product market fit, which I think is incredibly good advice. And our good friend Deval Gore at London Partners is always talking about partnerships and finding the right ones. So once again, Deval knows his stuff. And then of course, on the people and the network side, Olivia Minnick of the Fintech Alliance said that companies should build their brands and their individual profiles, so connecting. We urge you to use LinkedIn to connect to people in the program, either your cohort members or indeed some of the speakers that you come across. And then, of course, Karen Sandhu said fintech should be about, thinking about opening a bank account. It can take up to 6 months or even longer to open a bank account if you haven't got all the things in place. So that's something that's pretty important if you wish to trade here. And making sure that particularly, in the COVID era, that things do take a little longer. Right, today we're talking about focusing on some of the big changes happening right now in the UK and the UK fintech environment, and I suppose what you as fintechs can expect from UK regulation. I suppose the key piece of housekeeping, of course, once again, is about meeting the speakers. All the speakers are going to be on hand for 30 minutes in their rooms at the end of each session. So if your questions aren't answered, in the panel session, then of course go to the room, and they're very happy to take them one-on-one. And of course, use the platform to chat and to post. I think the key thing once again is this interaction and engagement piece. So for today's session, we're talking about fintech after Brexit. So Brexit, of course, has happened, it's good to see that the COVID word has been usurped by the Brexit word, although maybe for various different reasons in the UK press. I'm sure you're seeing it maybe from where you are in the world. There's been some good news. The UK has announced its first major FTA with Japan, the world's 3rd largest economy, so it can happen. But of course, there's other things happening that is catching people's attention. So on today's panel, we have George Riddell, Director of Trade Strategy at EY, and I'm sure he's got some pretty useful insights. And then Tareem Yusuf, Global Trade Policy Advisor at the City of London Corporation, and she's in the heart of what's happening in the city. Chris Wilford, Head of Financial Services at CBI, will be delayed joining the panel. He will be coming, I'm told, but he's stuck in a meeting, and I guess he will turn up when he does. But to moderate this opening session, please welcome Sabina Kiofu, Head of EU and Trade Policy at Tech UK. And over to you, Sabina.
Thank you, Peter. Delighted to be here. Welcome, everyone. So yes, I'm Sabina. I lead the work on EU and trade policy at Tech UK. We also run a financial services program, of course, that brings together firms from across the ecosystem to ensure that tech and innovation are fully harnessed and embraced by regulators in the industry in the UK. We've launched a financial inclusion working group earlier this year. We are fully engaged with the open banking community and also working on the future of payments. So loads of areas where fintech plays a key role to deliver value to the whole ecosystem in the UK, but also globally. So Tech UK is, for those of you who don't know, is the largest trade association of tech businesses in the UK. We represent the whole ecosystem, and 90% of our members are SMEs, so operating in the UK, but also abroad. So for today's session, we will cover FinTech and Brexit. Obviously, it's as Peter mentioned, it's kind of the Brexit agenda has come back at the forefront of everyone's mind after after 6 months of kind of running in the background. But there are also a number of FTAs that the UK is currently negotiating, has just concluded with Japan last Friday. And it's very exciting to see a kind of strong and progressive digital trade chapter, if you want, in that agreement. So there is an improvement to what the EU has negotiated with Japan previously. It's great to see as a direction of travel for the UK government, and we are looking forward to seeing how this negotiations evolve with the US, with Australia, with New Zealand, and UK's accession to the CPTPP, of course. So without further ado, you've already heard who's on the panel, so I'll skip that part and go straight to George and start with the kind of a bit of the topic that's the elephant in the room, and ask what is your assessment of the current state of the UK negotiations, and how hopeful are you of a deal this year? Over to you, George.
Thanks, Sabina. So, hello everyone, and great to be here. I have the unique, I don't know if it's an honor to talk about Brexit, but it is part of my day job at the moment, and sort of looking at EY's clients and assessing how they're going to be impacted by the negotiations or sort of lack thereof at the moment. So probably just to start off, sort of where are we in the process? So it was mentioned the UK formally left the European Union as a member state back in January. That was the so-called political exit of part of Brexit that the UK did. As of the 31st of December of this year, the economic Brexit happens, where the transition period ends. The UK comes out of all of the trading arrangements that it has with the EU and all of the EU agreements with third countries, as well as many of the other single market and customs union provisions that it's continued to benefit from since January, but that will stop as of the 31st of December. What the UK and EU have been trying to do since January is negotiate a comprehensive free trade agreement covering a whole host of different issues. So those that you would normally include as part of a free trade agreement, so goods and services market access, customs cooperation, aligning on product standards, all of the things that you see in traditional free trade agreements around the world, but also because of the close relationship and also proximity that the UK has to the EU, they're also looking at negotiating things like fisheries, market access, and various other bits and pieces that would allow certain things to continue after the 31st of December. So that's part of the agreement. Also of relevance to the financial services industry are something that I would call the sort of associated decisions that each side has to take unilaterally to continue some of those market access concerns going forward. So you've got a lot of financial services equivalence decisions that not only the UK, but also the EU has to make in order for that market access to continue. And you also need an adequacy decision to allow data to continue flowing from the EU to the UK, which Sabina is much more qualified to speak about than I am, but it's certainly one of those associated things that is currently being discussed as part of the future relationship. I'd also, one final element as part of that wider negotiation is the UK-EU Joint Committee on Northern Ireland. So as part of the divorce terms or withdrawal agreement that both sides agreed on last year and sort of allow and set the stage for the UK leaving in January, they set out how Northern Ireland was going to be treated given its unique status in not only the UK, but also the island of Ireland and some of the historical tensions that have existed around that. The protocol itself was quite high level. It set out the principles, but there's a huge amount of detail that needed to be sorted out. The Joint Committee has been meeting to try and do that, but sort of, and this is where I come on to the current situation and likelihood of a deal. So one of the things that has definitely come back into the news of late is this question of the implementation of the Northern Ireland Protocol. and how whether that undermines the UK's constitutional integrity, I would say, or not. And sort of there are different views on these sides. But what the UK government has done in the last week is tabled something called the Internal Markets Bill. Now, the bulk of this piece of legislation is quite sensible. It brings a lot of powers that were previously sitting in Brussels around product standards, services, market access within the UK from Brussels to the UK level. And the vast bulk of it is very, very sensible. But there are certain provisions in there around what the UK, giving the UK government powers to change how the protocol would be applied in the event of no free trade agreement being agreed between the two sides by the end of the year. There have been some quite extraordinary claims made around how this breaks international law, how the UK is an untrusted trading partner at the moment because they signed the protocol and now they're looking at ways to get around it. And there certainly has been a lot of headlines around this. And the reactions have been quite bad in the negotiations, which means I think, certainly from my reading and the people that I've spoken to this week, the likelihood of a deal getting done, which weren't phenomenal before this week, have dropped further, and adds to sort of a very contentious negotiating environment between the two. So you've got this Northern Ireland issue. You have also other outstanding negotiation issues within the text. So things around that fisheries market access I mentioned before, state aid, all of those have to be solved in the next 4 weeks, because that's when we hit the negotiating deadlines in order to have an agreement enter into force by the end of the year. The likelihood of that happening, I think, is decreasing rapidly in our assessment. Sabina, I'll stop there. Hopefully I haven't spoken too long, but I think helpful to give an overview of the context in which the UK is currently operating.
That's definitely definitely very helpful, and thanks for kind of translating a rather complex, kind of domestic and negotiations agenda going on right now. I'll just check that Tahrim is connected.
Sorry, yes.
Yes, perfect.
My internet completely dropped off of my laptop. I'm so sorry. I've now joined on my phone.
That's absolutely fine. You joined at the very right moment. So, then I'll turn to you while we have you here and the connection actually works. So, kind of a more, moving away from Brexit for a little bit. I'm sure we'll be back to it in no time. For someone looking to either invest or scale up in the UK, what would you say are some of the kind of incentives, but also some of the barriers for in the kind of financial markets in the UK?
Yeah, and apologies again, everyone. Sorry, I didn't hear George's Brexit piece there, but I'm sure I fully agree with everything that he said. Welcome everybody. My name is Tahrim Youssef. I sit within the sort of global trade policy team at the City of London Corporation. And some of you may be familiar with the corporation. For those of you who are not, we seek to promote the interests of UK-based financial services across the regions and abroad. So this is about ensuring that UK-based firms are able to grow and expand. But however, on the flip side of this, in order to maintain London's preeminence as a global financial centre, we very much need to enhance the competitiveness of the UK regime for overseas firms too. So our market access work focuses both on the regulatory environment globally for UK firms looking outwards, as well as the UK remaining open for business, so that overseas firms can access and provide financial services to UK firms without being subject to regulatory obstacles. With the UK looking to pursue trade deals across the world, we've been reiterating the importance of services for the UK, where goods trade is often the subject of focus for the UK, which is a services economy. Financial services in particular plays a huge role. We've sometimes had our work cut out trying to communicate this across government, but we have done, and we still do continue to bang that drum. And of course, all of our work from 2016 onwards has been undertaken against the backdrop of Brexit. Most recently, we've been seeing of a sort of real hardening of opinion in and around number 10, which makes a no deal scenario a real possibility. And although the city is prepared for a no deal, and some might argue that the contingency planning has already been put in place, with firms having enacted their no deal planning back in 2018, the sector is still pushing for a deal, particularly in areas such as clearing, data adequacy, and equivalence. And on the latter, it does seem that we're back to square one, having to go through individual equivalence assessments across the board, which is far from ideal. The sector would benefit from a deal and the goodwill that comes along with it to try and mitigate the effects of some of this. And leaving that slightly bleak picture to one side and coming back over to the market access piece, what we've seen in Brexit, and indeed with COVID as well, is that the UK has the opportunity to take a hard look at its competitive modelling. The UK regime is one of the most open when it comes to overseas firms conducting cross-border business with UK clients. This is in and of itself, and in comparison to other regimes across the world. However, what we've seen is, and an area that we need to work on, is how that openness is communicated. The system is often seen as complex and difficult for overseas firms to navigate. And we are doing some work looking in detail at how we can ensure that overseas firms are able to take advantage of the opportunities that is offered by UK's openness. Most recently, I've been focused on looking at the barriers facing UK firms operating in Australia. And I think we quickly found that we've got a lot to learn about how firms actually operate in market. And it's true that the same can be said of overseas firms in the UK. We still need to understand where the frictions are and what changes can be enacted to ensure smoother transition. And we are very keen to hear that reciprocal viewpoint from you guys, and to really build a picture of how overseas firms operate in the UK and where those barriers lie. I'll stop there and quit while I'm ahead, seeing as I've still got a connection into this panel.
Thanks a lot. I think that does paint a picture of what we've kind of known, that Britain is an open market for investment and for overseas firms to come and operate here. But of course, the complexity of the system, as everywhere, is a necessary kind of bit to navigate. And it's kind of great to have you here and have this conversation. So please do use the chat function to jump into this conversation. So kind of moving a little bit away from like the UK itself and the EU negotiations, on the broader kind of trading negotiations that are happening right now. So obviously the Japan negotiation was concluded on Friday, but there are ongoing negotiations with the US, with Australia and New Zealand, kind of running in the background of the whole Brexit saga. And of course, with everyone kind of focused on the short-term future relationship negotiations and what that means for business, and in the next 3 months or so, by the end of the year, would be kind of interested to hear your views on kind of the opportunities of these other trade negotiations going on that may kind of drag a lot less attention at the moment, but that are kind of nevertheless evolving in the background. So maybe this is one for both of you, but I'll start with George.
Thanks, Sabina. So I think one of the interesting things, I'll start with some domestic changes that are happening in the UK that I think are quite interesting, and then move on to sort of opportunities within the trade agreements, because somewhat linked. So one of the big things that is changing in the UK domestic space that will be of interest to a lot of businesses is the new immigration regime that's coming in as of the 1st of January 2021. This is because it's part of Brexit. The UK is leaving the single market, free movement is ending. So for a lot of European citizens who are arriving in the UK after the 31st of December, the immigration environment for them is going to be very, very different. They're going to have to undergo immigration procedures that they've never had to do since the UK joined the community back in the 1960s, and which has just been gradually liberalized. That is ending as of the end of this year. One of the interesting things for nationals coming into the UK from non-EU countries is that there are a huge number of simplifications that are being made to their visa and immigration procedures, because there is a leveling of the playing field for both EU and non-EU nationals coming into the UK. So whereas before it was very easy for French, German, Italian nationals to come to the UK, but really quite difficult for Australians, New Zealand, Americans, now there is an easing for that latter category. Not that many Europeans are happy about having those changes in immigration procedures, but it is interesting from the perspective of non-EU countries. Coming to sort of what are the real opportunities around some of these trade negotiations that are happening, I think I'd say sort of three main areas. One is actually sort of even better immigration and visa market access for Australians, New Zealand's, America. Those three FTAs, I think, are areas where the UK would be willing to go further, even more than it has done in a sort of reformed visa processes that are coming into force at the end of the year. I think there's also real opportunity around data and tech cooperation. This is an area where there is increasing balkanization around the world. We all know the US-China trade war is a tech one, largely at its heart. Even if we talk about sort of steel and aluminium tariffs, like a lot of what's driving it is sort of this balkanization of the internet, balkanization of tech. And I think strengthening those ties will be quite important going forward for the UK. And then the final piece is, and I would say this because I'm a former trade and services negotiator, is that particularly with Australia and New Zealand, I know that both sides are looking to do new things, not just in terms of market access, but looking to modernize trade and services provisions to really take into account everything, all the developments that are happening around fintech, around the Internet of Things, that really haven't been brought into trade agreements before, but they're thinking about, okay, so how do we do it now? And I think that's quite exciting.
Definitely, and we've seen the Digital Economy Partnership Agreement and a bunch of other agreements coming up in that part of the world that are definitely state-of-the-art agreements when it comes to digital trade. So hopefully the UK is looking to kind of join the club of like-minded nations in trade and services. Tareem, if I can come to you, obviously we've seen some of this innovative approaches with the fintech bridges, and I was wondering, what's your assessment of that? How are companies taking advantage of it, and if it's something we can kind of replicate beyond UK, Australia? So yeah, would welcome your thoughts on that.
Yeah, so we have been speaking to firms about the use of fintech bridges, and it's a really interesting model which broadly we support. We've had a lot of good things from firms who have engaged in the use of the fintech bridge. However, I think the one issue that has been indicated to us is firms requiring a little bit more support in order to scale up and graduate out of those sandboxes, particularly with regards to applying for a license if this is required. They felt that there was little distinction made between firms who have only just graduated and those who have been operating in the market for many years. And newer, smaller firms sometimes felt some form of differentiation would be of value. So I think definitely going forward, there is a role for jurisdictions on both sides of the bridge, whether that's UK, Australia, or UK and another jurisdiction, in supporting businesses to succeed in the new market past the initial point of establishment. And there's more to be done to expand and promote mechanisms like this, with firms not always knowing who to reach out to for support. I will caveat that with the fact that I know that the FinTech Bridge is quite a relatively new mechanism, and therefore a sort of a clearer pathway for progression may develop over time. But I think definitely if jurisdictions on both sides could support that, it would increase the efficacy of the bridge, and also just expanding it to include other things from Australia in terms of the consumer data right, and digital provisions as well. There's definitely more work to be done there to expand that to make it more effective. And then just on FTAs more broadly and the UK's kind of positioning on that. I think from our work on financial services, what we found is that the real benefits for the sector come from regulatory dialogue that sits alongside sort of a formal FTA. Greater regulatory cooperation usually reaps better and greater benefits for financial services. And as solutions to a lot of the issues that we're hearing about, such as sort of passporting of funds, can be solved or mitigated just by regulators kind of speaking to each other. And this is not to say that an FTA doesn't help. We fully support FTAs and see them as providing the impetus for what is really needed to drive that policy change at a regulatory level.
Thanks a lot, Tareem. We've already started having questions in the chat, so I'll turn to those now before Chris joins us, hopefully soon. So there is a question in the chat on something that seems like obviously a pretty basic market access requirement, which is opening a bank account, which seems to, from previous sessions, they understand that takes a very long time. So, you know, obviously that's something that, you know, done better and shortening the time would definitely increase the attractiveness of the UK for doing business here. Wondering if there are any comments or any work that you potentially, Tareem or George, if you have any thoughts that you've done on kind of pushing for that point with regulators in the UK.
I'll just jump in there. I just want to say that that's a really sort of good point that we have been hearing about as well from some of our work that we've been doing looking at the UK regime more generally. And this is kind of a piece of work that we're starting to look at and looking at how we can make the UK more open across the board. And when I kind of said that this we are sort of hearing from you guys and we would like to hear from you guys, this is exactly the kind of thing that I'm talking about. I think it would be really good if you communicate these kind of things to us, and then we can then look at them in our work and going forward. I don't know the technicalities of opening a bank account in the UK for an overseas firm, and potentially this is something that we need to do to look at a little bit better. But we have very good relationships with the regulators and with government as well, and so if we are notified of things like this, we can definitely use our platform to communicate that across the people who need to hear about it, essentially.
Thanks, Tareem. And we did have a Brexit question that didn't take long. So from a RegTech company, does after Brexit mean there will be a focus on FCA back from the EU regulation? How do you see it will create new opportunities in regulatory and compliance domain? I'm guessing that's for you, George.
Thanks. It is a fascinating question around what the UK does post-Brexit, and certainly this is one of the ongoing conversations that the government's having at the moment. I think, yes, certainly in terms of the regulatory bodies in London and around the country, there will be more focus on them because there is just a huge amount of activity that's coming back from Brussels. I think one thing that in the conversations that I've had with the UK's Treasury Department is that one thing that they're not stepping back from is regulatory cooperation forums and making sure that, you know, they're going to Basel, that they're meeting at the G20 finance sessions, and that they're still very much involved in all of those conversations that are happening around the world. So even if, you know, there are certain activities that are going to move from Brussels to London, the fact that they're trying not to give the perception, or indeed sort of the activity, that they're retreating from the wider engagement piece and regulatory cooperation that we've seen over the past couple of years. Coming to that future question, I think it's a really interesting one. The government at the moment is very focused on what they call levelling up the UK regions outside of London and the southeast. This is to deal with some of the regional inequalities that exist within the UK. I know that there's a huge push to look at the financial services sector in Edinburgh, which has its own sort of unique ecosystem up in Scotland, and actually is quite active, not only in the financing of things like oil, gas, and some of those related industries up there, but also has quite an active export and trading perspective as well. So that's definitely an area where the UK government's focused at the moment in terms of where the future policy direction is heading. I think also tech. There's a huge push within the business department and even Number 10 to do more on making the UK a tech and innovation hub.
Thanks, George. So, you know, maybe kind of going back to kind of the initial discussion we had on Brexit. So, of course, a lot of companies that are investing in the UK or setting shop in the UK or scaling up in the UK are doing so also with a view of a gateway to Europe, if you want, especially in the financial services sector. And it's kind of been a traditional kind of strength of the UK to be able to provide that. Obviously, you know, there are a number of negotiations kind of in its future relationship, but also separately on what's going to happen after the end of the year. But, you know, can companies still see that as the gateway to Europe, or what is your kind of advice for people looking at that particular question right now?
So, thanks, and I think it is a complex question because to a degree, some of it is dependent on what happens in the negotiations. So as I mentioned before, sort of the formal financial services passporting that a lot of companies in the financial services sector used to take advantage of when operating around Europe is going to end. We know that it's definitely not something that's under negotiation. Passporting will end as of the end of this year. What I think is subject, not necessarily to negotiation, but sort of if a deal is done or not, is around these equivalence decisions for financial service providers. If we have the equivalence decisions, then operating in the EU for UK companies or companies that have established themselves here is going to be a lot easier than if we don't have those equivalence decisions. So there's definitely an element of watch this space to see how things go. The interesting thing is that although these decisions are formally, unilateral decisions that the European Commission makes, and then makes the recommendations to the EU member states, you do see quite interesting geopolitical pressures on these decisions. Take the euro clearing for example. The EU, the Commission said that they were thinking about not granting that equivalence decision. They put delays on it. It's also really important to American companies operating in London. The US Treasury got involved and went, you guys can do your Brexit discussions, whatever you want, but this is impacting us, so sort yourselves out. And so there's a lot of, it's not just saying that, oh, the Commission will make a decision one way or the other. I think there's some quite complex things happening with that. Also, so there is that sort of market access point. It will be more difficult for UK companies to operate in Europe for the variety of reasons that we've spoken about. That said, certain things are not changing about London or the UK. When we can travel, it is extremely conveniently located. You've got the wider ecosystem, both here in the city and more generally, that is incredibly advantageous. And sort of some of these other factors that make London and the UK an attractive place to do business, I would say largely they're not going to change.
Maybe on that point, and kind of turning to Tareem, are there any trends of, in terms of how companies think about the UK, any kind of movement on any kind of operational changes that you've noticed since 2016, and maybe even more in kind of, let's say, the last year? I'd be interested to hear that.
Yeah, so I mean, firstly, I'd agree with George that London is going to remain a preeminent financial centre. It's one of the most densely packed areas of highly skilled workers in the world. It's more so than New York, more so than Singapore, and that's not going to change going forward. And I think it's part of our job to maintain London's competitiveness. And we are still seeing an awful lot of fintech setting up in London, and we hope to create an environment where this continues going forward. With regards to sort of things that we're seeing in terms of current discussions, we've been working a lot as the City of London to change the narrative around fintech. So looking at it as a broader than a sort of cohort of companies that are tech-enabled startups, which traditionally base themselves in Shoreditch. We focus much more on tech integration across financial services. So this is on a spectrum from startups to scale-ups to sort of large incumbent institutions that are starting to use technology in a different way. And indeed also big tech companies that are starting to make the move over into financial services. So the definition and sometimes the semantics of the past have been problematic, given that tech companies are kind of seen as challengers and disruptors, which puts them in opposition to financial services. But we would really like to change that narrative to include fintech as part of the UK offer when it comes to financial services. So as part of this, we are engaging in an independent fintech review. So this is being led by UK Treasury, and it will establish priority areas for industry, policymakers, regulators to explore in order to support the ongoing success of the UK fintech sector. That's including access for overseas firms. And we're hoping that in part this will change the narrative about fintechs just being startups. It's instead about the whole financial services ecosystem and the adoption of technology across the board. And I'll just kind of mention here as well, one of our areas of focus is currently RegTech, and the RegTech industry is kind of at a key moment in its development. And definitely more needs to be done to support the sector to grow and thrive, to add value to the wider UK economy. And London is seen as an international hub for RegTech, and it's one of the areas which can definitely strengthen trade ties between the UK and other jurisdictions going forward. So we've been hearing about this in the UK-Australian context. I know that there's a lot of Australian firms on the line, and UK and Australia share similar regulatory environments. The UK regulator, the FCA, are very forward-looking in this respect and are actively exploring the use of innovative technologies to address some of the more long-standing challenges. So that's definitely going to be one area to watch going forward.
Very interesting, Tareem. Thanks for kind of putting the spotlight a bit on RegTech, which is I think one of the kind of more recent sectors of focus in the whole tech spectrum. So I'm going to pass on the floor to Chris, who has just joined us. He is the head of financial services policy at CBI. I think, Chris, what would be really interesting to hear from you. We've had quite a broad discussion on Brexit and the FTAs, but also kind of the complexity of the system in the UK for anyone kind of looking to either invest for a first time or scale up. So it would be interesting to see what are some of the kind of key current regulatory discussions in the UK that you guys are leading on kind of making an innovation and business friendly environment for fintech in the UK. So over to you, Chris.
Thank you very much, Sabina, and apologies everyone for being slightly late. I think, look, there's a lot of complexity here. There's lots of developments. You've spoken about Brexit and some of the other factors going on. I'd actually land the point, it's incredibly exciting time in terms of the UK regulatory environment and how it's developing. And, you know, the UK financial services regulators have always, I think, well, certainly when I talk to international partners, have had a good reputation and continue to do so, and being quite innovative and developing new ideas. And I think that's now reaching another level with Brexit and other things, and this whole idea of what is the UK about as a financial centre. And I think what I would point to, particularly in terms of innovation, is the really conceptual report commissioned by the former governor of the Bank of England, by Hugh Van Steenis, The Future of Finance, last year. And that put forward some really interesting ideas across a range of different ideas about how we can make the UK more match fit and how we can capitalise on areas of existing excellence and go into new ones. And I think there's probably three broad buckets. So one is, how do we deal with old things better? And, you know, we've heard a bit about that, about, you know, fintech helping companies innovate and get on board. The other one in the middle is, how do we manage emerging risks? And the third one is, how do we lay the ground to deal with new things? So I think in that last bucket, there's been a big push around climate change and what data and methodologies are we going to need to deal with that. So the Bank of England and the FCA have done a whole series of consultations and other things, working with corporates and financial services firms in themselves about looking at how would you do a climate stress test, what are the different data points you would need, what are the methodologies to deal with that. And then there's a huge appetite suddenly for financial institutions and also corporates themselves and their reporting and other things. How do we deal with that? How do we manage it? And they're working quite closely with fintechs and regtechs just to get to grips with that. So there's huge opportunities to capitalize on there. In terms of managing emerging risks, I think that's a wider shift we're seeing as financial services moves from just being a service to a utility, so sort of sitting underneath that. So you're seeing a big operational push and that focus on resilience from both the Prudential Regulation Authority and the Financial Conduct Authority, as well as the Payment Systems Regulator, these three different summits within the financial regulatory system here, about looking at how, rather than just setting parameters, how do you maintain stability and provision of services? So, for example, the FCA's duty to protect consumers from harm, okay, there's a lot about setting the playing field, but ultimately to protect the consumer from harm, you need to maintain their access to services. So there's a big focus on that operational pulse. So I just really want to land that point that this is a period of change in the UK, but also big opportunities, and probably through necessity, the regulators are having to be very open to engaging with new startups, new ideas, just to maintain our sort of competitive edge and say what the UK is going to be all about now.
Thank you, Chris. That's a very positive kind of spin on the conversation we've had so far, which is a bit of doom and gloom on the Brexit negotiations. So
we've got to be positive in these times, hey? Yeah.
You need to find the opportunities and the excitement. So, we don't have a lot of time left. So what I'll do is I'll give you the opportunity if anyone still has any questions, especially for Chris now that Joe's joined, please do put them in the chat or the Q&A function. If not, obviously you'll have the chance to kind of speak to him in the Meet the Speaker session in about 5 to 10 minutes. While waiting for you to kind of come up with questions, if any, I'll kind of do another round of the panel for your kind of closing remarks with a focus on kind of tips or resources that our audience can take away from this conversation, and can have a kind of a look in more detail of the kind of work you are doing, or where they can find information for the kind of discussions we've had so far. So maybe I'll start as I start to the panel. So I start with George, go to Tareem, and then to Chris, if that's okay with you. So George, over to you.
Thanks, Sabina. I think shameless plug if we're talking about what to look out for in Brexit, or how to prepare for it if you've already got a UK presence or thinking about doing it very soon, is to go to ey.com, and we've got a dedicated Brexit page going through all the different areas around sort of issues and impacts and recommended course of action for businesses in preparing for Brexit. So shameless plug there on the Brexit front. I think to respond slightly to Chris's point, I think I would very much agree that the UK, there's a lot of exciting things happening at the moment. There will be a lot of noise, particularly through the back end of this year. The headlines, Brexit is going to dominate. There's not going to be much oxygen for other things to get noticed, but they are happening in the background. I think, sustainable finance and some of the green tech discussions happening here at the moment as well are really, really interesting and exciting, and not happening anywhere else from what I've seen. So there's a lot happening. Sometimes it takes a little bit more effort at the moment to find out about it, but certainly worth the effort when you do.
Thanks, George. There we go. Positive notes all throughout. I'll go over to Reem.
Yeah, so I think from the City of London perspective, I mean, we are doing a lot of work on really ensuring that the UK remains competitive as a financial centre. I think that we're looking at the UK's regime and the openness that is there, and trying to put a spotlight on what the issues really are, and what overseas firms kind of sort of what barriers they're sort of banging their heads against when they are trying to enter the UK market. This is supplemented with work that we're doing on sort of access to talent, and how we can remain attracting the best talent in the world post-Brexit, and we're working closely with government to make the case for sort of movement of talented people as well. And we wrote a report actually a couple of years ago with EY, which made a series of recommendations to make the visa system easier. So there's a lot of strands to the competitiveness work that we at the City of London are continuing to pursue. So that being said, I guess my tip would be just reach out to us. We have a programme of global engagement on the trade investment side, which has helped a lot of firms who are trying to understand how to enter the UK market. We've got really good links into government as well as the regulators. And as I've mentioned, I think it's been mentioned a couple of times, it's not always easy to navigate a completely new regime, particularly one that is as complex as the UK's. So we can, try and help as much as we can to signpost and try and link you to people who do know those complexities and who can help.
Great, thanks, Dareem. I think you've just given away that, yeah, all the four of us kind of work together quite a lot. So, yeah, it's always good to kind of reconnect among the four of us as well. I will now turn over to Chris for his closing remarks.
Yeah, thanks very much, Sabina. I think, three broad buckets. So for help and assistance, I think government, institutions and community. So government, Department for International Trade, the business department, their websites are sort of getting more information and more pointers on there. So definitely check out that, particularly the Department for International Trade, based around some of the fintech bridges and other things. I think there's a lot of information that is starting to come through there. In terms of institutions, as Tareem was saying, people like the City of London, Tech UK, Innovate Finance, EY, ourselves, the CBI, we've got a lot of information on our websites, and we've got the networks as well. So we're very useful sort of avenue in. And the third one is community. So people who've already done it. So I definitely say people like Level 39, they have a great online hub now as well. They're based in Canary Wharf. That's a big cluster, and that's one of the big benefits of the UK is you've got such a concentration of the investors, the tech developers, the institutions themselves, all of that coming together in some of these hubs like Level 39. But also don't forget the regions in the UK. So Fintech North has been doing a lot of great work in recent years. They've got an online presence. Northern Ireland has a developing centre of excellence for different aspects as well. So really do sort of try and tap in there, use social media, get involved and see how people have found it.
Thanks, Chris, and thanks, everyone. I think this has been a very interesting discussion, and now you can all attend the Meet the Speaker session. So for the speakers, you'll have the link in your calendar for your own rooms, and for the audience, you can join for the next half an hour to speak to, to ask your questions, to speak further on all the topics you've heard here this morning or this afternoon, wherever you are. And without further ado, I'd like to thank everyone and thank the organizers for putting this together, and my fellow panelists for their insights, and enjoy the Meet the Speaker session and the rest of the day.
Thank you, Sabina, and also panelists George, Tareem, and Chris. A great session, and certainly from my side, after being in the UK for more than 30 years, this country has been through a lot, and I think Brexit is just another chapter in its history. Certainly, I can see the potential of 2021, partly also down to COVID, that could be an amazing year for business growth and opportunities, and I think certainly. The whole RegTech area in particular is about to scale up, and so there's no doubt in my mind that next year could be a perfect time. And in fact, also speaking to my trade government friends down in Australia and New Zealand, they are gearing up for supporting international growth in a significant number of ways. So you're going to see a lot more support and teams on the ground in the UK. So I guess it's all going to happen for the good next year, is my opinion. But obviously, I don't have a crystal ball. Before you head to your rooms, the next session is also obviously around sort of compliance and regulation and how it works, and obviously what you need to do as a fintech to comply with UK regulation. We have 3 outstanding speakers who really know their stuff and have a lot of experience around the sort of regulatory environment. I suppose the elephant in the room is that the FCA themselves couldn't attend the panel. We did ask them twice. Apparently they are quite busy on COVID-related activities, but that's okay. I think the 3 folks, Nick Lee, Jeff Dadswell, and Diana Paredes, know their stuff, and I think can give us some really good perspective. And tomorrow, starting at 8 o'clock BST, we obviously have a couple of really quite interesting sessions. One that I'm quite deeply involved around setting up a UK presence, and particularly around talent and how to get your business operational in the UK. And once again, more details will be sent through overnight. So on that note, please obviously feel free to hang around after the second session. Some newfound people will be sort of online until 11 o'clock BST. To help with any issues or questions you have. So thank you to the panel, much appreciated. Please head to your rooms, and we will speak to you and see you in about 30 odd minutes. Thank you very much. Bye-bye.